moving over to the important topic of exchanges. Exchanges are always in the news. They are an important part of the digital asset ecosystem. But will the future of exchanges be different, especially if the number of digital assets consolidates and we move to a future of more tokenized assets from the real world? Here to lead a conversation with a number of panelists across the globe about this important topic is one of my team members at Bitcoin Association. She is the regional manager for Southeast Asia at Bitcoin Association, but also leads our efforts to do outreach to wallets, exchanges, and many other service providers around the globe to support Bitcoin SV. Please welcome to the virtual stage, Ella Qiang.
Thanks, Jimmy. Hello, everyone. Great to join CoinGeek live from Singapore. For most of the newcomers to the digital assets world, exchanges are oftentimes as the first business service providers that a lot of people engage with when they want to gain access to their first Bitcoin or first digital asset. And we've heard a lot about throughout the discussion today that in the Bitcoin SV ecosystem, we talk a lot about leveraging the scalable, immutable, and auditable public blockchain that is Bitcoin SV to tokenize real-world assets. And in the earlier panel discussion, we learned a lot about the various token protocols and issuance practices and token management. And in the overall process, token issuance is step one. For some of the tokens out there, you need price discovery. You need liquidity for such tokens. So today, we really have the pleasure to join by 5 industry experts to discuss the role of exchange and trading in a tokenized world. I'd like to quickly introduce all of them, and then each one of them will have a brief overview of their company. First, Tom Albright, CEO of Bittrex Global. Hi, Tom. Great to have you as well. Next, we have Lennix Lai, Director of Financial Markets at OKex. Lennix is joining us from Hong Kong. It's pretty late over there. Hi, Lennix.
Yeah, you too. Thank you. Thank you for having me. Yeah, my name is Lennix. Very nice to have me in the panel.
Thanks. And next, we have Gabor Nagy joining us from our London studio. Gabor is a Business Development Director at OKCoin.
Thank you. Great to be here.
Next, joining us, Armen Azatyan from Moscow. Armen is CEO and co-founder of a decentralized exchange called TDXP. And then Daniel Skowronski, General Manager at Fabriik, which is a name that we've heard a lot about today. Hi, Daniel.
Hey, nice to meet you. Pleasure. Looking forward to this panel.
Great to have you. So first, to just kick it off, why don't we give a brief overview of your company, what types of services that you provide, especially anything that's related to Bitcoin SV. Tom, why don't we start from you?
Sounds great. Yes. So I'm Tom Albright. I'm the CEO of Bittrex Global. We are a worldwide cryptocurrency exchange. We support about 250 to 300 different token pairs for trading. We have a number of markets, including Bitcoin SV against euros, against US dollars, and a number of other quote currencies as well. And our mission is to increase adoption of blockchain technology around the world. So we think that's a great fit with what Bitcoin SV is doing, and really excited to be here.
Awesome. Lennix, why don't you give an overview of OKex, which has been a very early supporters of Bitcoin SV?
Yeah, true. So we already kind of like so my name is Lennix. I'm the Financial Market Director of OKex. I'm one of the early stage founders of OKex as well. So OKex is obviously one of the biggest exchange in the world, who's right now trading around 5 billion US notional per day. Right now, I think we are one of the most one of the exchange who offer the wide range of financial instruments and derivatives with BSV as an underlying. So basically everything in BSV, not just on spot, in margin, not just on but all kind of derivative instruments, for example, like futures, all kind of futures, all kind of expiry of futures, and perpetual swap. We do have a BSV as the underlying. We are hoping that our exchange technology can help BSV in terms of price discovery process and liquidity. Thank you for having me in the panel.
Let's go to London, our old friend Gabor, who also joined the last CoinGeek conference in London this February.
Thank you, Ella. It's good to be back again. OKCoin is a crypto to fiat spot exchange. We are a partner exchange to OKex and a fiat on and off ramp, supporting users who wish to buy and trade digital assets in a safe, compliant, and easy to use environment.
Great, thanks. And then next one, Armen, why don't you give us an overview of what is TDXP and how are you utilizing Bitcoin SV?
Yeah, thank you, Ella. The TDXP is a trading app and protocol deeply integrated into the BSV ecosystem. At TDXP, you can trade all kinds of financial markets, including cryptos, stocks, commodities, forex, and even bonds. Our mission is very well aligned with BSVs. We want an honest world. We want to facilitate global trade and commerce. And to do so, we are fixing one of the backbones of global economy, because the fair market price discovery mechanism is broken. So I hope I'll have a chance to tell you more about it. But we want financial markets to be more organic. We don't want to see bankrupt companies, skyrocketing 2-3 times right after the bankruptcy is announced. And we have a solution here. And the problem we are solving is very much similar to what Twitch is doing, because Facebook is free to use because they sell their customers' data. And Robinhood is free to use for the very same reason. Thank you.
Thanks, Armen. Daniel, why don't you give us an overview of Fabriik, especially with the exchange side?
So hi, my name is Daniel Skowronski. I'm the GM of Fabriik. We have this philosophy and belief in everything digital, and that encompasses a number of different areas. So for example, in custody, right? So that's both in the crypto side, but also on the real world asset side. We also have a division for market making, and we make a lot of markets. I think even some of our fellow exchanges here, we're making markets into your exchanges on the BSV cryptocurrency, as well as on the fund side, we have our own BSV fund using AI technology to be able to create algorithms and trade on the BSV to create value for those who are investing into the fund. And then also, we're really big on the tokenization side. This is probably going to be our bread and butter. As I said about before, the everything digital, the tokenization is going to be a really big part of it and play a huge part in us creating a marketplace where users can come for that transparency and that fairness to access these new digital markets.
Thanks, Daniel. So at Bitcoin Association, when we are engaging with exchanges, we're quite focused on having more fiat gateways to support BSV so that users and companies that build Bitcoin native applications, such as Twitch, Peer Game, Streamalities, they can allow users to have easy fiat on-ramp options. And I think Billy Rose from Twitch earlier mentioned that the fiat on-ramp is a piece of the puzzle for this new user onboarding problem. I'd like to ask both Tom and Gabor, since both OKCoin and Bittrex Global support fiat on-ramp for BSV. What's your opinion on exchanges' role in bridging fiat to digital assets? Let's start with Gabor.
Thank you. Well, at OKCoin, we actually have a sub-segment of client categorization specifically for fiat gateways. We call them crypto businesses, which come to us to source liquidity of digital assets and then pass those tokens or crypto onto their clients. Now, we have a number of these clients who are part of our premier client offering, and they can actively benefit from a number of features on exchange, like pre-crediting of their accounts. So they don't need to wait for funds to clear or fiat to clear in their account prior to purchasing and trading crypto. On top of that, they can have features like delayed settlement, which will support their liquidity needs from funding perspective. So we are very much in support of developing these fiat gateways and look to continue to provide a solid offering within that space.
Thanks, Tom. Do you have anything to add?
Absolutely. So I definitely agree with all that. And I do think that crypto fiat or fiat on-ramps and fiat off-ramps are one of the most critical pieces of infrastructure that exchanges can add to the ecosystem. Especially as we're seeing more and more mainstream users discovering crypto and moving in and out, the real world is still, the traditional world is still primarily based on fiat. And so being able to go from euros or British pounds or dollars into Bitcoin to BSV to all these other crypto use cases that are being built, it's absolutely critical. It's really the bottleneck in a lot of ways to adoption of blockchain technology. And so it's one of the focuses that we've really had this year is enabling more and more fiat on and off ramps, from instant SEPA transfers to additional credit card payments around the world. And we've got those in 170 countries now, to multiple currencies. It's, I think it's, again, a critical component for the ecosystem. And it really is the first step that a lot of people take in their crypto journey. So it's something that we are continuously looking to support and to upgrade and to add capabilities.
Thanks. Yeah, the fiat to digital assets liquidity is definitely very, very important, especially in the earlier years, for allowing regular users to onboard to some of the native, especially like in the Bitcoin SV world, the native built applications for consumer users. Now, switching the gear a little bit. Speaking of liquidity, recently we've seen significant liquidity being migrated from centralized exchanges to some of the decentralized exchanges. Obviously, there are pros and cons in each model. With the centralized exchanges, it's a single point of failure. We've seen the most recent hack from KuCoin. And then on the decentralized exchanges, there's a confusion around definition of so-called decentralized exchanges. But in some of the actors in the Ethereum world, using bad code being exploited, users' funds lost, but there is no entity that being responsible for such user loss. So I would like to ask your view on how do you see the battle between centralized exchange versus decentralized exchange, and in what direction do you think decentralized exchange will evolve into? Lennix, why don't we go with you, since OKex is mostly known as a centralized exchange, but also have some experiment on decentralized exchange.
Yeah, correct. Thanks for your understanding on OKex. So first of all, I don't see it's a battle between centralized exchange or DEX or decentralized exchange, because we used to think that DEX become maybe a future competitors of centralized exchange, but after this kind of the development, the recent development on DEX, I don't see it's a battle at all. As a matter of fact, we do see a new type of crypto native user who actually bring in new user to the crypto space that actually benefits the volume and the user growth of central exchange as a whole. So we can, as you can see, like last 2 months, we are having one of the biggest month, the best month in terms of volume and the growth of the user as well, just because of the developments of the recent centralized exchange. So I don't see at least at this point of moment, we are kind of like working together for the overall growth of the industry. We're working together in a different perspective, eventually. So obviously, I think the successful development of DEX is the answer of how the industry itself to answer to provide a solution between TPS and the security and true decentralization. And these features, of course, the feature including smart contract capability and capability with all the other blockchain as well. So if you think that you're building the DEX and you're thinking that you have confidence to have the best TPS with proper amounts of security and decentralization, with all kind of features, including cross-chain and smart contract, I think turn out that you can be a very important piece in the trading ecosystem of, amongst crypto. But I think right now, at this point of time, CEX and DEX is working really well for the industry as a whole.
Now, Armen, you built a decentralized exchange on Bitcoin SV, and I want to get back to your point earlier about you said the fair market value is broken. Do you want to elaborate on that, and why do you think decentralized exchange is the solution for that?
The fair market price discovery mechanism is broken because it's largely because retail traders' positions, they are, owned by big exchanges. So we want to give traders their data, their positions back. We want to encrypt it and put it on chain. And actually, I agree with Lennix that existing DEXs are very niche products. They are built mainly to avoid KYC and to trade tokens that we're not able to get listed onto centralized exchanges. And frankly speaking, I tend to believe that the existing decentralized exchanges are not actually decentralized. They are usually owned by their founders, and they cannot scale because they're not using BSV. We and TDXP, we are using BSV, so we can scale, and we are separating the trading protocol from the regulated branded trading application, so that we call it Bitcoin trading protocol. It is responsible to settle profits and losses. It holds the liquidity, and it's governed by a distributed network of nodes powered by BSV. And about my, views or far distant future, I believe that at some point in time, we will be all using decentralized exchanges, but we will not be using this misleading term by that time. So these exchanges will be probably called like on-chain exchanges, utilizing one global unified order book. It will be a very beautiful world.
Daniel, what's your view at Fabriik? How do you see the centralized exchange versus a more kind of on-chain decentralized exchange approach?
So I've been in the industry for quite some time, and we've been talking about centralized and decentralized before even the first decentralized exchange was even made. And I remember the first GUI interface. For some of you, my other panelists, they probably remember how terrible that experience was. And even though the experience has improved, I think one of the biggest issues with a decentralized exchange and to get better adoption is the fact that there needs to be regulation. And by having this decentralized exchange, a purely decentralized exchange, that just doesn't really fly with a lot of the regulatory bodies out there, whether you're in Europe, whether you're in the US, out in Asia. They just don't like this idea. I think he said it perfectly, that it's getting on tokens that were not able to get listed on other exchanges. And a lot of those exchanges have very strict rules and reasons why they're supposed to be on there, and they probably failed those tests, right? And that's just not conducive to, in my opinion, growing adoption in this market. And what I kind of see happening is that the centralized exchange, because of that regulation, can actually provide that fair pricing and that price discovery that is missing in some centralized exchanges that are not regulated, right? So if you put the regulation in, that pricing will come in. It's very efficient in today's markets. Look at NASDAQ, look at, the Borsa exchange, right? So it can work, but under regulation. Now, looking into the future, I think that there's most likely going to be a hybrid approach between decentralization and centralized. So I think there'll be centralized where the order book is sitting, where all the price execution is happening. There's a good monitoring systems in place, and maybe the customer's wallet is decentralized and is somehow connecting that way. So there'll be, I think, more likely a hybrid approach, but I don't really see a fully decentralized unless it's sitting in somewhere in space, because at the end of the day, you need to have some ownership there. Otherwise, the countries just won't adopt this.
Yep, totally. Now, the current business model for most of digital asset exchanges are really to support thousands of tokens trading on the platform and treating all assets kind of as the same class citizen, which is somewhat justifiable because honestly, the tokens that are being traded on exchanges right now don't really have strong utility at this moment. But down the road, we definitely foresee a world that is completely different from the current status quo. So I want to kind of ask the exchange, how do you balance the resource allocated to support a large number of blockchain tokens in a generic way versus to develop blockchain-specific knowledge and know-how to better integrate with the ecosystem? So one example is in the Bitcoin SV ecosystem, we have this address protocol called Paymail protocol that is being supported by all BSV native applications and wallets. So, what's your view on, from the exchange side to support, let's say, deposit and withdrawal using a Paymail protocol for BSV? How do you balance that need? Why don't we go to Tom?
Yeah, that's really a great question. And I think, at the very highest level, what we always try to keep an eye on is where innovation is happening in the industry and then what our customers are looking for. So as we see customer demand for very specific protocols and for different things that are being implemented, then we pay a lot more attention to that and try to make sure that we're implementing it. We also try to project out a little bit and see where the really innovative use cases are, what people are building that's going to be interesting in the next 3 to 6 months, and try to stay on the cutting edge of what's happening. I'll tell you one of the most interesting parts about this industry, though, is that it moves so fast and people are building such amazing things that it becomes really, really hard to predict. And so, one of the other things we like to do is support as many tokens as we can, because we just frankly don't know what's going to come out the other end as the big winners and where teams are going to continue to innovate and get market fit and market adoption and go from there. So it's really a continuous balance of trying to support a lot of tokens, a lot of protocols, and as much as we can, while really focusing on things that our customers want. But again, at the end of the day, we're really just trying to focus on increasing adoption, on supporting innovation, and on allowing our customers to access the very best tokens, the very best assets, and grow their wealth and improve their lives that way.
Yep. So Armen, you obviously are more involved and integrated with the Bitcoin SV ecosystem compared to regular exchanges. And I know you've explored other blockchain protocols before to build your decentralized exchange. Can you share with the audience what's the decision process to choose Bitcoin SV to build TDXP on, and how's your experience so far?
You know, the key benefit of building on top of BSV is the infrastructure and ecosystem of brilliant, wallets. It's either MoneyButton, RelayX, or Dot Wallet is also coming on TDXP very soon. And in one chain world, everything is much easier. It's I think for an exchange like OKex, it's almost impossible to keep up with all those new crypto platforms and tokens listed every week. We at TDXP, we are integrated deeply into the ecosystem from day one. So our users can enjoy all the benefits of such integration. They can sign up to the platform with a single click. They do not need to deposit any funds in advance. They trade, they pay as they trade, right? And when the trading position is closed, funds are automatically withdrawn to their private wallet. It's really very convenient. And when I saw that the users of BSV are actually buying likes, when I understood how microtransactions are working, it was like a no-brainer for us.
What other blockchains that you explored before Bitcoin SV?
Our development company, we tried developing a charity smart contract on top of Ethereum. We were using EOS to do what we are doing now. We're trying to use it. We also considered Cardano platform, as well as we were working with BitShares for quite some time. And the main problem is stability of the protocol, because since BSV is fixed in stone, we as developers, we can rely on the code that we are writing, that it will be operating like in the future. And in case of BitShares, for example, it was changing. Yeah, it changed like 2 times in a year, and we had to rewrite all of the code. And another important point is scalability. None of the crypto platforms, especially Ethereum, they are not scalable.
Yeah, that's a great point. Daniel, so we've heard a lot from Ryan on the tokenization platform that Fabriik is providing. Can you share a bit about what's the plan for Fabriik to collaborate with the rest of the Bitcoin SV ecosystem? And for the interest of builders and companies out there, what types of businesses and projects should come and talk to you guys?
Right. Okay. Yeah. So, we've already have built out a tokenization platform where anyone can come and register, and they can actually create a token very, very quickly, and that's powered on the BSV blockchain. They would be able to create a token pretty much on almost anything, whether it's real estate, artwork, a card collection. They could create their own token, whether it's a security token, a utility token. That they have the opportunity to be able to do anything. But the nice thing about this is, it's built on the BSV blockchain. There's other protocols out there that are either built on Ethereum or other companies that are trying to come up with it. But at the end of the day, what the best thing about this is the scalability, right? And the ability to do microtransactions. And we made the interface so simple and so easy to use. I would really encourage anyone who's ever thought of creating their own token in any way, whether it's a high-end to raise money or something to just take my card collection and I want to tokenize it, you're able to do that. And then we're going to be building out a marketplace for those tokens to be able to trade on so that users can come and be able to trade that in a regulated and safe environment.
So a marketplace for Bitcoin SV ecosystem tokens.
Yeah, so like I said earlier in my introduction, is at Fabriik we are a BSV-backed or supported ecosystem, right? Again, whether it's through custody, whether it's through the fund, whether it's through the exchange, or through even security tokens. Everything we're doing is based on the whole BSV infrastructure.
That's great to hear. And we already touched upon a little bit earlier about tokenization of real-world assets, such as stocks, bonds, commodities, real estate, company shares, etc. And I'd like to ask the panelists, how do you see the role of digital asset exchange developing to kind of facilitate these asset classes rather than nowadays the native blockchain tokens? And how do you foresee the exchange landscape evolving over time? Let's go to London.
Thank you. Well, first of all, we have to think about this from a regulatory perspective. At OKCoin, we only list utility tokens. And this creates a space which ultimately supports the user base that we have. The tokenization of securities will, I'm sure, develop over time, but the regulatory framework around that, I cannot see being ready for some time. But no doubt we'll get there eventually.
Yes, and this tokenization of real-world assets is not really a new concept. It's been around for some time, and we've seen a few companies out there experimenting that on public blockchain and private DLT solutions. But we haven't really seen any real asset tokens being built on other blockchains are popularized yet. What do you think the reason is? Tom, do you think it's scaling challenges? Is it compliance and regulatory issues that Gabor mentioned earlier, or it's lack of demand, liquidity? What do you think the reason is?
Well, I think that Gabor and Daniel are exactly right on this. I think that the regulatory side here is incredibly complicated and incredibly hard to navigate. So what you're doing in a lot of cases is taking this incredible new technology that's evolving at an unbelievable pace and trying to pair it to a regulatory system that has laws that were written 100 years ago and standards that are been enforced over the last 40 or 50 years in a very particular way. And trying to get regulators comfortable with things and move that quickly is just a long, slow process. But ultimately, I think I agree that we're going to get there because the technology works so well, and there are so many things where tokenization makes perfect sense for the long term, from real estate to art to companies doing fundraising. When they, I can see a world where a company starts its seed round by creating securities tokens on a blockchain, evolves through venture capital funding and private equity funding, and then goes public just by pushing a button. And all that really changes is who has access to be able to trade or invest in those tokens. So I think the applications for this technology lend themselves really well to all these use cases, but the entire system really just needs to pair together. And circling back to the decentralized exchanges versus centralized exchanges, I think this is where there's the tremendous advantage for centralized exchanges. With the fiat on and off ramp, and with KYC and AML checks, and with working together with the traditional financial system and trying to integrate those two things a little bit more closely, I think that we have a better chance to move forward with making regulators happy and showing them that we can use this technology in productive ways and still protect customers and follow all the principles that have been set out behind this regulation. So I'm incredibly optimistic about the future of this. I think it's just going to take some effort from the ecosystem to get us there.
Yep, for sure. Daniel, you have a comment on this?
Yeah, actually, I do. So on the whole aspect of, I agree with Tom about the decentralized and centralized. In terms of the regulation side of this, right? So it's really important for us to be able to work with regulatory bodies, because at the end of the day, if we don't, we can't create something, right? And I was lucky enough that I came from a world of really heavy regulation, and I understood a lot from different parts of the world. And I was able to create actually the first digital stock on the blockchain. I did it actually on Ethereum. It came out in late 2018, early 2019. We tokenized real world shares like Apple and Amazon, and we got a lot of coverage on this around the world. And the whole story around this was to be able to do microtransactions, which now everybody seems to be doing microtransactions on stocks now. But that was really unique at the time. And it really kind of showed that power of what can happen under a blockchain technology. But what was really challenging with that was the regulation side. Now, we were kind of clever in the way we came up with being able to kind of make a hybrid stablecoin / derivatives / this. We kind of merged 3 different regulations together to be able to do this. And what I'm really hoping is that one day that we can really see a much clearer path line for us to not have to jump through these hoops. And again, I don't mind challenging the status quo and using the assets or the regulation that we have and try to push a little bit further, because we definitely did in that case. So, that shows it is possible to create these other digital types of assets, again, whether it's stocks or commodities, existing or new ones that are created out there. But the challenge will be continually on the regulation side. But it is possible. And proof was, almost 2 years ago, the first digital stock was actually created.
Have you seen much demand from the issuer side, and what specific values that they see to issue, their stocks or bonds on blockchain? From your experience,
So,
Daniel.
The issuer side, not so much yet, because I think people are still trying to figure out what chain is going to win, or where is the liquidity, right? I think one of the biggest problems is where's the liquidity. Yeah. I can say that when the first digital stock was issued that we put out there, I think a lot of people didn't know what to expect, right? Some people wondered if it was legal, if it wasn't legal, and I think still that holds kind of true today when you're talking about other companies trying to bring something forward. In terms of pickup, quite frankly, the digital stocks, we saw a lot of good pickup in the third world countries, which actually is that bottom billion people that need these kind of microtransactions to be able to gain access to these financial products that they didn't have access to before. But of course, the volumes are very low, right? You're talking, $10, $50, maybe $100 would be traded. But then if you start to multiply that eventually, if there's a real adoption by, 20 million, 50 million users, that really starts to gain good traction and volumes. Now, one of the biggest things that we're asked about is, by tokenizing Apple, wasn't Apple upset with you for redoing that, right? And they were saying, hey, you can't actually reissue another share that's already been issued. But because we made it more like a derivative and we made it like a stable coin, what was really great about that was the fact that we were buying the real world share, which was creating liquidity in the real market, as well as backing the one for one in the digital space, right? So from my friends inside some of these bigger companies, they actually thought it was really cool that we were able to do this. So, how that will transcend to new companies going digital only instead of, the existing companies, it's still playing out. But, I think the existing companies, that's the first step, getting over that hump and moving in that direction right now.
Yep. As you mentioned, one asset class is tokenized fiat currencies or stablecoin. And earlier this week, we have the first stablecoin wrapped USDC being issued on the Bitcoin SV network by RelayX team, facilitated with the RUM protocol. And we believe that all tokens will eventually gravitate towards the most scalable network with the lowest fees and fastest transactions. We've already kind of seen that with USDT went from BTC Omni layer to Ethereum and now to other alternative chains due to very high transaction fees. And really that high transaction fee impact the customer experience at those exchanges. Coinbase Pro recently announced that they're going to let their users to take the burden of the transaction fee because it's getting way too high. So how do exchanges view what protocol-based stablecoin to support next? Let's go to Lennix.
I think in terms of stablecoin is kind of like an idle fund or the parking fund for user to tap into crypto. So before they trade on anything else, they have to hold certain kind of stablecoin. If they sell on something, they have to hold on certain kind of stablecoin as well. So the believed consensus of stablecoin that having a relatively stable in terms of value that is mimicking the current real world asset class, for example, like US dollar versus euro dollar, is very, very important. So the mechanism of how stablecoin to deliver this promise of a stabilized value is our first evaluation of criteria for us to add or even consider any stablecoin to be make it available on to OKex and normally there are only two or three kind of stablecoin in general right now, like a US Tether, a fractional reserve-based stablecoin, or the full reserve-based stablecoin like USDC, or algorithm-based stablecoin like MakerDAO or something. So I think we are going to see the conversion between the speed and the robustness, the tech behind the conversion between different kind of stablecoin. For example, we would like to exchange fiat back to your crypto and crypto back to your fiat. What would the process look like? How the API protocol that will require to integrate? What kind of compliance procedure, AM procedure that will require to check? And what's the threshold of compliance, the requirement of compliance that we require the customer to provide? So I think these kind of factors are very important in terms of a balance of compliance and also the liquidity or the prospective or the potential liquidity of such stablecoin.
Now we talked a lot about asset classes that we can see in the traditional world, but with unbounded on-chain data capacity and microtransactions on Bitcoin SV, we can now have innovative models such as tokens, whether it's fungible or non-fungible tokens, being the vehicle to form new data markets. And that's not something that we hear often being discussed on other blockchain projects. So before I wrap it up, my final question for each one of you is, what other forms of tokens for data markets or other use cases that we currently don't have in the conventional market are you mostly excited about? I think like an example, I can give you an example. I think in the first panel we have today, the ecologist mentioned about tokenizing data streams. We have ideas in the Bitcoin SV communities about tokenizing memes to create a meme market. We can even, in the future, maybe able to tokenize a Twitch and being able to trade it and monetize from that. So I'm curious to see, personally, what are the types of tokens that you're mostly excited about, and how do you see the role of exchanges may fit in? Let's start with Gabor.
The most important thing, I think, is that we continue to see mass adoption. And I don't have the answer for you in terms of what is going to be the next token that will take off, or what trend will be the next trending thing. But what I see every day is mass adoption coming to the digital asset space. I see the caliber of clients coming through the door, onboarding on a daily basis, and I see the volumes growing on our exchange. So that is what makes me excited, and I think that is what will drive our ecosystem and the continued growth of this digital asset space.
Thanks. Tom?
Yeah, so we like to say around our offices that time in crypto moves about 10 times the speed of time in the normal world. So, to me, one of the most exciting things about being in the space is watching what other people are building. And I think I frankly have no idea what people are going to be doing 6 months, 12 months, 2 years from now. I would never have predicted some of the things that have happened, the rise of DeFi and all these different things that people are building. But, what we really are focused on is just where there's liquidity, where there's customer demand, where there are really interesting use cases. We want to make sure that we're adding those. And so, again, supporting innovation as best we can, and seeing what people do and witnessing this incredible growth is the most exciting thing.
That's great. Armen, what are you excited about the most?
Well, I am very excited about regulated tokens, security tokens, tokens proving ownership of commodities, real estate. There are immense use cases for tokens, but in my opinion, exchanges should get involved only with regulated tokens. As for non-regulated tokens, like utility tokens, that, by the way, can't be used to raise funds or traded as a financial asset, I believe use case for non-regulated tokens is, pretty much applicable to, brownfield businesses that want to introduce some customer retention programs, bonus programs, or some loyalty initiatives. I'm not so excited about non-regulated tokens in general, as I believe that as a new business who can accept negligible fees, microtransactions, for example, or you're an API seller, in most cases, it will be more beneficial for you as a business and your customer to transact directly in BSV native token or stable coin like USDC introduced by Relay. Thank you.
Thank you. Lennix, what's your view? What are you excited about?
Yeah, I spent 5 minutes to think about. I think of two ideas actually, just roughly idea. I would particularly think on the tokenization of time, especially time on the professional. So, for example, like people around the world seeking for career advice, and for professional, they are often required to book the time for the real professional, like industrial professional. For example, like I often be asked to seek advice from somebody else that would like to change their career to crypto. So why not book my time by paying BSV, right? That is some of the idea. And also, I'm particularly exciting that a tokenization of XX rights to close and liquidity provider or market maker or HFT fund, because normally they have really high return, but at the same time they have a really limited capacity. The tokenization of these access rights for investing this kind of HFT will be a valuable use case for these kind of data markets. That is some fun data for. There's some idea for 5 minutes thought.
Daniel, what about you?
Before I tell you what I'm excited about, I think I'll try and answer your original question with perhaps an example for the audience. So I think, like, let's take solar power, for example, right? So I can actually, as a solar owner with panels, right, I can sell that power to a third party, who then will sell it to some aggregator, who will then sell it to another person, and then that eventually comes back to the consumer, right? So there's so many markups in between that whole journey, right? And I look at is if we could, for example, tokenize maybe in a power grid or something like this, every kilowatt is, I don't know, costing a token or something, that a shop on the corner who is buying their energy could go to the exchange and be able to look and see, well, what is the best price, and or maybe there's the best prices right next door to me, right? Maybe I, as the owner of that solar, could then sell him my energy directly. And this is only can happen through tokenization. So again, that's, I think, just one example of, perhaps thousands of ways to be able to do this. In terms of what I'm really excited about, I'm really excited about a potential corona vaccine, and maybe that could be administered on BSV blockchain. I don't know, but that's what I would be really excited about.
Yeah, I would be excited about that too. With that, I would like to thank all the panelists, Tom, Lennix, Gabor, Armen, and Daniel for joining us with this very insightful discussion, and for your continued support to the Bitcoin SV ecosystem. We're really excited to see a Cambrian explosion of all types of tokens powered by the Bitcoin SV in the background, to facilitate more efficient price discovery, better accessibility, and higher liquidity. And really look forward to collaborating with all of you. Thank you.